There is no doubt the higher timeframes are beginning to look weak for Bitcoin. However, if we're going to spot continuations and reversals, we need to refer to the smaller timeframe. What is the small timeframe data suggesting? How are the structural and technical levels holding up? And what can we expect for the next move? These are questions we're going to be answering today. Let's dive in. Okay guys, welcome back to the channel. Thank you so much for tuning into today's video. We're going to go ahead and take a look at the short-term price action today, discussing the next move for Bitcoin, what the short-term technical and structural data is suggesting, what we need to see explicitly for a breakdown and continuation toward 25.2, and what we need to see on a smaller time frame for the bulls to reclaim control and start to push the price back upwards. Before we get into it, smash the like button, hit the comment button, and of course subscribe to the channel. We do daily videos on Bitcoin, focusing on the facts, the data, the technical information, the structural information, economic news, and so much more. No hype, no emotion, no BS, pure, raw TA. If that's the kind of content you like and are interested in, you can get more of it in our Telegram channel, the second link down below. Of course, we've got access to everything: news events, updates, charts, analysis, videos, information, educational posts, and so much more, all in this channel. If you're interested in joining our VIP channel, you'll get access to trading signals, exact entries, exact targets, exact stop losses, and so much more. Exclusive analyses and everything you need to not only profit, but again, take advantage of the markets. We're short, we're long, we do altcoins, we do Bitcoin, we do everything you need. As you can see, entries, targets, stop losses, exclusive analysis, everything in here. Including that, you'll get access to a group chat. Our group chat has 4 sub-chats: trading, education, and charts. We do daily videos. We have a help chat, we have an altcoin analysis chat, and a general chat. Go ahead and contact us for more information. You can find out more about it in the pinned comments right over here, including you'll get access to our entire trading track record. Let's get into the video, guys, starting off with the market data. At the moment, for the day, we're down 36.55% for 24-hour volume, sitting at 56 billion. By no means is 56 billion low, but again, 56 billion is not all that high either. Kind of in this middle volume range. As for 24-hour liquidations, we are pushing toward the lower end. We're sitting at 36 million, and 36 million is quite low for 24-hour liquidations. It is expected, as we have seen volume drop close to about 40 billion over the last 24 hours, down 36%. We do generally see liquidations fall down as well. The majority of the short-term move has actually occurred in the last 24 hours, so we are seeing a bit of a consolidation, a bit of compression, and we're discussing that in today's video, but that explains why we have seen liquidations drop. If we look at the current month, May, we are down 9.68%. Coming up to the end of the month, it is very likely we are going to close red for the month, unless Bitcoin prints a god candle, which we'll discuss in today's video. If it can even occur, what would have to occur for that to actually, print on the charts, and how likely it is. It's quite unlikely. We'll discuss it anyway, but it's looking like we're going to be seeing a red close for Bitcoin. And of course, if we do close out this monthly candle red, that will actually close that monthly candle as an engulfing candle underneath the prior monthly open price. And the key level we need to stay above for this month is really 28.4k. If we close this monthly candle under 28.4k, that is going to show an engulfing candle has printed, and that is going to show significant weakness and could be the start of a monthly reversal. Now, it doesn't necessarily mean it's going to occur, but it does show massive weakness in comparison to the last month, and that can develop into a monthly continuation downwards. And of course, we'll discuss what we need to see on the short term for that to actually start to play out more and more. Because remember, guys, the short term drives the macro price action, the macro charts, the macro candles. These are all incredibly smooth versions of what is going on in a small time frame. If you want to catch reversals, if you want to catch continuations, you have to be looking at the smaller time frame, not the 5-minute chart. If you're scalping, sure, but we look at the hourly, at the 4-hour, look at the daily, stuff like that. Moving on from there, guys, we can see volatility index. It's really not looking too great for Bitcoin. It is still very much on the drop. We are starting to see a little bit of a plateau since the 21st of March now, so about 5 days. We're hanging around 1.66% on the 30, and on the 60-day period, we're seeing almost a similar thing occur. We're seeing a little bit of a slope, like It's kind of converging a little bit. The steepness is kind of dropping. That is showing a little bit of compression, but again, we are starting to see that volatility overall continue on that downtrend. It'd be nice to see it flip upwards, but again, we'll discuss what that will actually have to occur on the small time frame for that to happen in the charts. So moving on from there, guys, the DXY is obviously on a rampage upwards, bouncing very strongly from the 101 zone as expected. That double bottom, we did say double bottom formation. We saw the breakout of the small time frame over here. We saw the break over to 50 EMA, and we saw the break over the higher time frame downtrend. 3 points of confirmation resulted in a continuation upwards. Since then, we have developed a uptrend as represented by this arrow. Put a little arrow at the end of it just to make it a little bit more obvious. This is in fact the uptrend. This is in fact the downtrend. Obviously, the price action is above the downtrend, therefore we are now in the uptrend. If we do want to create a new downtrend or move toward the downside, we do need to lose this uptrending support level. This uptrending support level will remain as support, and it can be retested and likely will be retested on this uptrending pattern. However, it does not matter until we lose this level. If this level is lost, that is when the DXY will be losing its uptrend and developing a new potential downtrend. Until then, we are still looking for a move to 105 to 106. If the DXY rallies, the stock market and cryptocurrency is more likely to move toward the downside, / it is more likely to suffer weakness. If the DXY moves downwards, we are more likely to see strength develop on both the stock market and of course on the cryptocurrency market, and that could push the price upwards and facilitate growth. So as long as the DXY is moving upwards, I do not expect a massive reversal to occur for Bitcoin or the stock market. If the DXY starts to move downwards and break this level, that is when that scenario becomes slightly more probable. Moving on from there to stock market, let's take a look at S&P 500. We can see we are still hanging out weekly underneath that resistance. We are slightly above the POC at the moment, finding a decent amount of support again. The POC is lost. We do see a pretty strong gap all the way down to around 4,000. Drag that line across. We can see with the uptrending support level over here, we can expect actually a retest of around 4,100 to 4,050 if we do lose the POC. Again, this is a bearish structure. We have an uptrend over here. We have a uptrending resistance. This is a rising channel. It's representing a overall uptrend that is weakening. We can see decreasing momentum, velocity, speed, volatility, and obviously volume as the price is moving up. That is overall weakness. So if we do see the uptrend break, we can expect a move toward the downside. Of course, if the DXY continues upwards, this scenario is more likely. The DXY moves downwards, the scenario of which we break upwards towards this next resistance at 4,300 is more likely. Moving on, guys, to the Dow Jones, we can see a very similar thing has played out over here. The only difference being the Dow Jones has actually taken that extra step and has broken down from its uptrend, closing a daily candle under, and is currently in that second daily candle, which is active for 18 more hours, sitting below it. So it's not looking ideal here for the Dow Jones. We can see these swings towards these lower levels. We do have a decent support sitting between 32,000 and 32,200. That will be the likely target if it does start to continue downwards. Again, we're not expecting the bulls to retake control unless 34,400 is in fact broken. At this exact moment, it is not looking ideal. Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. And let's go ahead and get into it. A really quick macro overview, guys, and then we're going to finish up and talk about, well, the short term. Most of today's video is going to be about the short term. We're going to focus exactly on what's happening on the short term at a technical level. a structural level. We'll discuss what we expect next to happen, what our trigger points are, and what is going on. But we want to quickly do a macro overview, discuss what the charts look like on a higher time frame, then we'll get into it. We'll spend a few minutes doing that. So currently, as you know, guys, Bitcoin, it's been moving up for the last few months. Since around November, it broke out of a falling wedge structure. You can see the falling wedge structure over here. Of course, this is a bullish reversal structure. We saw the bullish reversal. We saw a move to 25.2K being that first target. And finally, we moved to 30,000. 30,000 being the yearly low of the prior bull run cycle. What does that mean? Well, if we look at the 4-year cycle, guys, you can see every single bull run has had obviously all-time highs, okay, and all-time lows. After the bull run highs, we generally come down and we consolidate along a horizontal support for quite a fair bit of time before finally, when we break down from that level, we see a parabolic crash, or you would say we see a strong move toward the downside. The majority of the drop occurs after that level is broken. That level actually forms a basis of support in which we call the bull run support, or the yearly support for Bitcoin. This yearly support is a horizontal level that stretches across the price action and provides a degree of support and resistance moving forward in Bitcoin's future. If we look at the prior price action over here in 2014 to 15, you can see we lost that level, and then it's provided a decent amount of resistance and then support moving forward. Same thing over here occurred. We broke down, provided resistance, provided support, continued. Okay, so looking at this scenario over here, we can see we're actually retesting that level now. That level in this instance in 2021 to 2023 cycle is of course 30,000. So 30,000 is of course not only a major yearly resistance, but in fact 30,000 is going to be the macro trigger point, meaning it is the trigger point or the price point we need to break a monthly candle above to flip the trend from a weekly uptrend, a daily uptrend, into a macro uptrend. And the macro uptrend has the potential to push the prices higher and actually facilitate a bull run. So as I've been saying, since we reached 30,000, 30,000 is a very key resistance point. And in fact, it's probably the most singular, most important price point on the chart for Bitcoin's price action on the macro scale. And we do need to break above that to see a macro uptrend. But as you would see, we've printed a very aggressive red candle from that level. So what is happening, guys? Are we going to break above 30,000? Are we not going to break above 30,000? To answer that, we need to look at the smaller time frames. We'll do that today. But I do want to go ahead and say this real quickly. No matter what happens on Bitcoin's price action, whether we break above 30,000 next month, this month, 5 months from now, or we go down to new all-time lows, and whatever happens, the horizontal levels remain intact. Meaning, eventually, we're going to have to retest $30,000 again, and no matter when we retest it, $30,000 will still remain as the macro uptrend trigger point. Meaning, we will need to still break above 30,000 to enter a macro uptrend. That fact is a fact. That is a valid argument. It is not something we can mess around with. It's not something that changes with time. For a macro uptrend to develop, we need to break above the prior bull run yearly low, which is sitting at 30,000. Let's go down to a daily chart. What is happening on the daily chart? Actually, you know what? We'll go to the weekly chart, then a daily, then getting stuck into a smaller time frame. So we have the weekly chart over here, Bitcoin. You can see we actually got rejected from that $30,000 range pretty decently. It's not a very nice look for Bitcoin. You can see we are moving on the small time downwards. The last 2 weeks, our candles have been relatively small. It does show us a degree of compression and support, potentially a loss of bearish strength. That is something we are considering. Or what it could show us is that we're coming close to support. And in this instance, the latter is more likely, as we are pushing down towards a $26,000 trigger support, which we'll discuss when we come down into the smaller time frame price action. However, going back to this chart, we can see a few incredibly key things. And more importantly, the most important thing, should I say, is going to be that 200 moving average. As we can see, the 200 moving average is providing a base of support right now on the weekly. If lost, that will confirm the weekly uptrend has in fact been lost. We're currently in a weekly uptrend. We have been in a weekly uptrend ever since we broke above 25.2K. 25.2K to 24.4K is that horizontal resistance / support. Ever since we broke above 25.2K, we have been in a weekly uptrend. This area here is a weekly uptrend. If this level is lost, if the 200 moving average is lost, it is going to facilitate a move towards the support. And if the support level is lost, we are actually officially out of a weekly uptrend. If we are out of a weekly uptrend, what does that mean for the macro? It means it is harder for us to see a monthly candle close above. It means the probability of a continuation lower as opposed to a continuation above 30,000 is higher. It changes the probabilities on the charts. It says there's now a greater probability we move lower than there is a probability that we break above and close above 30,000 within a short period of time. So the weekly charts are starting to look weak. Of course, with a 200 moving average close here, it is not looking ideal. We can bring up some more indicators such as the market cipher A. If we bring the market cipher A up, we can see that the 50 EMA, I'll bring it up in a second. We can see that the 50 EMA, where is it? It is one more time. I don't know why it's not loading. Let's see. Market cipher A, third time's a charm. There it is. Okay, market cipher A, you can see, is also providing a decent amount of support. The market cipher A being that red horizontal line. In fact, the market cipher A is sitting at 25,800. The 200 moving average is sitting just above 26,000. These 2 points are very key levels. Because if we go ahead and zoom into the small time frame, we can see that 25,800 being the lower range of support in the 26 to 25 8K level support range is represented by the 50 EMA, okay? And then the upper range over here is represented by the 200 moving average on the weekly. So this area here is an area of significant support on the smaller time frame for a continuation lower, and again is a very strong area for a bounce. We'll talk about it on the small time frame. Let's go into the daily, then we're coming straight to the small time frame. So the daily chart is not looking ideal. As you can see, we have lost some very key levels. We've lost a 50 EMA, we've lost a Gaussian channel lower band, we've lost the major support sitting at 26.8 to 27K. And more importantly, guys, we are broken below and we are underneath the 28 to 30,000 yearly low resistance. This is that yearly resistance of the bull run we're discussing, that yearly 4-year cycle resistance. That is it. That's the horizontal resistance range. We can see the peak in the VRPV right over here representing a massive surge in liquidity, a massive surge in volume and resistance. Therefore, anything under this level towards that next chunk is actually going to be in a downtrend. And that is why we have represented on the chart over here a weak, oh, I didn't mean to draw out a line. We can see a weak bearish trend. As you can see, we take that peak here towards the next peak. We have a decrease in volume, which represents decrease in volume, decrease in resistance, and it equals a low resistance range. And therefore, if we're moving down from that, down from the upside in, it means we're in a weak bearish trend. So that is how we come to that conclusion. We can see that, guys, our next support is sitting at 25.2K. So downtrend on the daily is intact. Downtrend on the weekly is on the verge of it. The monthly chart is looking weak. And that's what we sort of started a video in the intro. The monthly, the weekly, the high time frames are looking weak. There's no doubt about it. So the question is, what is a small time frame doing? How can the small time frame facilitate this continuation downwards? And again, could it change it? Could we see a bounce? So let's talk about the small time frame, guys, really quickly. Structural levels, then we'll get into the higher technical levels on the smaller time frame. Really important we understand what's going on. If we delete everything from a chart, we're looking at the VRPV. Right now, we are underneath a major area of liquidity. The 28, specifically $28,000 range, if we zoom out a little more, towards that 27.2, but more specifically 28, more centered around 28. So let's just say $28,000 right now, is going to be that trigger point for a flip of the short-term trend. This is essentially flipping the trend from, this is bearish, okay, I'm gonna write it in bearish over here. Okay, we're bearish, and then above, we're short-term bullish, okay? In essence, okay? In essence, what we are actually is we're bearish below it, and as we push lower, we go from bearish to strong bearish, and we're actually neutral at this level. As we break above it, we go from neutral, from weak bullish to strong bullish. So that's actually what we have if we're looking at a trend narrative, or the narrative of direction, or the trend direction, whatever you want to say. That is what we're kind of looking at. So right now, as we can see, the trend is very much bearish. We are very much in a downtrend. If we go back to our chart over here and get everything back up, what else we can see is we have a few very key levels. Not only do we have our structural horizontal levels represented by these red and green boxes. This red box is a support. The rest of these are now, of course, resistances. Not only do we have our directional biases for a higher time frame, but we also have two patterns. We have our uptrending resistance represented by this diagonal line, and we have this horizontal support range represented by this blue box. First and foremost, guys, for the short-term price action to regain strength, for it to flip bullish on the smaller time frame price action, we need to flip above this bearish trigger. This is number one, 20.8K 27.4k being this upper range resistance, as you can see, 3 rejections from. So number 1, we need to break above this. Number 2, we need to break above the uptrending diagonal resistance and this horizontal resistance range, as that is going to push the price from bearish short term to neutral and potentially gaining strength on the short term. So for the bulls to take control, they need to, on the 4-hour chart, get above $28,000. Above $28,000 is going to put Bitcoin in this neutral territory, out of the bearish territory, and that will facilitate an environment of which uptrends can actually develop. And if we go back to the daily chart and we take a look at that level, $28,000, guys, is once again that low level of the 30 to 28k resistance. Not only that, it is also the midline of the Gaussian channel. So breaking above 28,000 will push the price back above the midline of the Gaussian channel, back above 28,000, and could facilitate a continuation higher. If that does occur, we will also see the momentum on the daily chart push upwards and break out, again flipping daily momentum. The probability of all of this happening is quite low, and the reason why it's quite low is because the trend is the trend until it is not, and therefore we do have to assume the trend is bearish and continuing downwards until proven otherwise. And in this instance, the point at which it is proven otherwise is exactly the point of which it flips, meaning this 28k break is not only the start of bullish strength on the higher time frames, but of course is going to also be the invalidation of the bearish trend and the validation of a continuation upwards. So it kind of overlaps at exactly the same point in time. So right now we do have a bearish narrative. The bearish narrative is strong, and the bearish narrative on the weekly, on the daily, on the small time frame is more probable. It doesn't mean it's certain, however. Looking at the higher time frame, we zoom out a little bit more, we can see the 26,000 to 25.8k is going to be the most important level on the chart right now for the smaller time frame. Even if we delete absolutely everything else and we draw this level in, 26,000 to 25.8k, we can see this area has acted as a strong base of support. Now, here is another thing. Although we are in a downtrend, we do have to assume support is support until it is not. And thus, we do not expect this level to break and push lower on the smaller time frame until it does. Therefore, I would be looking for short-term scalps, but I wouldn't be looking to position too aggressively on higher time frame short swings yet, as this area can still provide support and push the price upwards. If you are taking short swings right now in excess, you are doing it wrong. If you're taking a couple altcoins that are showing massive weakness and broken down from longer term structures, sure. But if you're just aping into anything short right now, you're doing it wrong. That should have been done at 30,000 deviation, at 30,000 retests when we did it, okay? Right now, we are not doing that. We are shorting on scalps. We are looking for reversals. That is what we're doing. If we lose 26k to 25.8k, actually, in fact, I'll go ahead and say if we retest this zone, we're very unlikely to hold for a third time. We can see a VRPV gap over here is occurring. We'll be entering this range and filling that gap, taking us to 25.2k. On the smaller time frame, guys, let's take a look at exactly what is happening. So let's zoom in to like an hourly chart. We can see on the small time frame, we have actually come up and retested. This is our horizontal range. If you've been watching the channel over last week, we've discussed a lot. We said this was resistance at the top, this was support at the bottom, and we're looking for bounces between. When we finally lost this level, we saw a strong move toward 26k, exactly as expected. In fact, we shorted right over here all the way down in VIP, which is a phenomenal trade. But I digress. This, of course, is now what we call a support resistance flip. What was once support is now resistance. This is now resistance, and therefore we are under resistance. So the short-term bias should be a rejection and a move toward the downside. We can validate that, or we can look for validation on the smaller time frame. As we can see, a rising channel is developing at that resistance point, and therefore we have an uptrend, and we can assume that if the uptrend is lost, we can expect that move towards the next support. If the next support is retested, it is unlikely to hold, and therefore this will be the validation of a potential further breakdown and continuation lower. So how can the bulls reclaim control here, as it is obviously looking quite grim, right? If we have weakness developing on a small time frame, if we're sitting underneath a massive rejection zone, and if we do reject, we come down over here and we will most likely lose that, it really doesn't give the bulls much of an opportunity to regain strength and reclaim control of the charts. But there is one way the bulls can do so, and that is they need to invalidate the bearish momentum that has been developing in accordance with the market structure we see over here. We have a uptrend on the RSI, we're broken down representing a negative shifting momentum. The price needs to break above this level and push above 26.8K and $27,000 to invalidate this bearish move. Okay, if the price is able to get above $27,000, this bearish move will invalidate. The price will be able to push back into this range, okay, this range we had developing over the last couple weeks, and then we will be back to square one. Now, if you remember the square one, meaning the structural levels of significance, the key breakout and trigger levels will go back to being the same, and this will be deviation. Therefore, we'll be looking for, once again, a break over 27.4 thousand for a continuation upwards into 28, and thus, if we break above 28, we'll be looking for the shift from bearish to neutral. So for the bulls to reclaim control, we do need to see that play out. Until that plays out, the short-term bias at the moment, at least for the next few hours, is obviously downwards. Looking at one more thing, guys, before we wrap up the video, we do obviously have a downtrending resistance here. It'd be very, very safe to assume if we eventually break above this downtrending resistance, and by no coincidence is it converging at 28,000, we will actually flip this downtrend into our uptrend. Remember, this is our downtrend. If we break above, we will develop a uptrend from it, and that can push us higher. But until then, the trend is looking weak, the higher time frame is looking weak, the short term is looking, well, the short term has been weak for a very long time, but the weakness has developed and we are now at major support. If we lose our support, we continue lower, the downtrend resumes. This is a potential bounce point, but the bounce looks unlikely as we do have very strong resistances sitting between where we are now and where we need to be to flip the trend from down to short-term bullish. So the probabilities are still in favor of a downtrend, the continuation downwards. The bulls can still regain control, but it's going to take an absolute lot for them to do so. And of course, when it does occur, it'll be very, very obvious and we'll be able to flip narrative very quickly. Thanks for watching, guys. I hope you enjoyed today's video. If you learned something, let me know, and I'll see you guys in tomorrow's video. Before you get going, go ahead and sign up to a Crypto Academy. This is a place we teach how to trade, 10-unit course, teach you everything you need to know. We have 120 students nearly. Go ahead and contact us via email to get more information. That being said, I'll see you tomorrow. Thanks for watching.